Ladies and gentlemen, welcome back to the Crypto News Podcast. We are buzzing as always. It's your host, Matt Zahab, and I'm super pumped to have Spencer Farrar on the show today, partner at Theory Ventures. Spencer was a two-sport athlete at Berkeley, swimming and water polo. We're definitely going to get into that. Swimmers are some of the most certified sick puppies on the planet, and we're going to have to get into that. He then worked at a Web3 startup called Velocity, which processed more than 150 million in volume per day before joining Bienville, a $4 billion asset investing in early stage blockchain companies. Spence, super pumped to have you on the show today, my friend. How you doing?
I'm good, man. Thanks for having me. I appreciate it.
So you're a Cali boy and you're currently in the Big Apple. You're in New York City. What's that like going from because again, as a Canadian, when we go to the States, we have like three big spots: New York, Miami, LA. I feel like everyone does, sort of the big three. It's just like the three most well-known cities in probably North America and in the States. But like as someone who lives in a sweet spot in the West Coast and then goes to New York quite a bit, like what's that like being able to just go in the same country, spot to spot, just like that?
You know, when I was a kid, my dad used to go to New York a lot, and I always thought it was like halfway around the world. I thought it was so far. It's nice being able to be bi-coastal and kind of bounce around between major cities, but the city is
electric.
It's electric. It's tiring. It's really tiring. I don't know how these people do it. They do dinner and drinks every night, and it's not for me. I'm like an outdoorsy kind of guy, and it's fun to visit. I could never live here. I'd burn out.
There is a different vibe, different smell, different feel, aura to New York City. And one of my favorite parts, everyone walks with a purpose. Toronto's pretty good for that, I will say. Like a lot of people haul ass in Toronto, but like whenever I go to LA or Miami or places in Europe, like people are just walking, head in the clouds, lights are on, nobody's home. It's like, dudes, that like get a little pep in your step, you know?
My girlfriend's from Toronto and I can't keep up with her. She walks way too fast. Yeah. So I don't know what's wrong with you guys up there. But New York City's cool. Everyone's on a mission. Everyone's working on something. And I think the cool thing about New York is you kind of have this melting pot of different interests, right? You have finance people, you have art people, you have
everything.
People in tech. Where I live in Palo Alto in South Bay of NorCal, and is mostly tech, right?
Yeah.
But I think each city kind of has its own personality, and LA is entertainment and fame, and New York is kind of a little bit of everything, and then
nice melting pot.
San Francisco's tech. Yeah.
So your girl's from Toronto. I know we're going a little off topic here, but as a Toronto native, I got to ask, like, does she have any stereotypical sort of Toronto-isms or very Canadian-esque things that she does that you either love or hate? Anything in between?
She's too nice. She's the sweetest person. Yeah.
Yeah.
She's so great. No, her mom has, I feel like I imitate her mom sometimes, and I exaggerate the accent and stuff. And
a lot of A's and O's.
Yeah, a lot of A's. Oh, hey, Spencer, how are you today? But my girlfriend's great. She's super sweet. No mannerisms or anything like that. But yeah, she's awesome.
True. Let's go back to Berkeley for a sec. Must have been a sweet place to go to school. And we'll jump right into the athlete thing. Swimming and water polo. I played water polo, I want to say, for the first time with my either grade 9 or grade 10 hockey team. But like AAA hockey in Toronto, it's the hardest sport to play. Everyone wants to play it. It's tough. Every single kid on the team is a multi-sport athlete, like purebred athletes. We did water polo, and it almost dehumanized us. It was beyond humbling. We got and then swimming, the cardio you guys have. How is it so different? Like I have good cardio. I'm a good swimmer. I get in the pool after 5-6 lengths, like I'm toast.
Yeah. It's a good question. I think my mom threw us all in the pool at an early age so that everyone would be water safe. And then you kind of peer over the corner and out of the corner of your eye and you're like, what are those guys doing over there? It looks fun. There's throwing balls around and stuff. And so it's just a natural progression. But I really do think it's the best workout for you by far, just swimming in the pool. It's the hardest, on your cardio.
And the least intrusive on your body. Like
really good for your joints.
Yeah. It doesn't beat you up.
Yeah, shoulders, you just kind of take care of your shoulders. But I have a ton of really cool stories here. It's funny you ask because I usually don't talk about it. I think many athletes, they have an identity crisis after they finish their sport.
What do you do? And it's worse for the pros too. Way worse for the pros.
For sure. Yeah, I had 11 Olympians, I think, or something on my team when I was at Cal. We had some of the best swimmers in the world. So you go to Cal to swim if you want to, and if you want to go to the Olympics, you go to Cal.
Yeah.
Water polo team is really great. Won NCAAs, I think, more times than any other team in the US. So, really great programs collectively, top notch. Went there to try to go to the Olympics, got close. But I think, try to be multidimensional. I don't think I have a lot of friends who went through identity crisis after school
Yeah.
or after sports, letting it go. And I don't think it really defines me. So try to do many different things, and luckily stumbled into, investing and kind of got my feet wet there. It's a great hub for crypto too, actually. Bunch of really smart people came out of there. A friend of mine, Sunny, started Osmosis, right? So there's just a great influence there, probably being in Silicon Valley and or close to it. And a lot of really smart people, start great projects and companies out of there. So I was fortunate. I went for sports and then kind of stumbled into tech, and
That's awesome.
yeah, really enjoyed the experience. And yeah, I'm still in decent shape and try to swim. I swim now twice a week at Stanford, actually, which is right around where I live.
How, if you don't mind me asking, how tall are you?
I'm like 6'3".
Oh, so are you like, do you have the classic like fish build where it's like after you swim for so long, you have like the trap gills and everything?
Yeah, I definitely look like a swimmer. I've been harassed my whole life for having big shoulders. Yeah.
I mean, it's a sick build though. Like you guys look like absolute, like you guys are all brick shit houses. You guys are monsters. It's crazy. Like big thighs, like chiseled. Like you guys almost always have cheese graters, like 6-pack, big boulder shoulders. Like it's a good build.
I remember I got into, when I first started getting into crypto, I was talking to this girl, and she was at Maker at the time. She was like a super smart engineer. And she's like, I'm like, hey, I'm Spencer. And she's like, hey, I'm so-and-so. And I was like, oh yeah, I'm like, I work in crypto. And she's like, no, you don't. I was like, what?
She's like, you're a swimmer?
She was like, dude, you don't look like a crypto bro. So yeah, it's pretty funny.
I love it. All right, let's speaking of crypto, let's jump into it.
Yeah.
So again, after swimming, after hanging up the trunks, moving on to the real world, you worked at a Web3 startup, Velocity, processed a shit ton of volume, 150 mil a day.
Yeah.
What was that like?
I'll give some clarity on that. And my bad for not, providing better background context. My career trajectory, I was actually a cognitive science major. So I studied a bunch of neuroscience, computer science.
Jeez.
Finished that about 2 years in. So I took some business courses, and I actually went into structured credit out of school. That was my first job. So Velocity is a publicly traded company. They basically originate mortgages and then securitize them and sell them as bonds. Right? So CMBS, RMBS, if you're familiar. So started originating mortgages and then actually packaging them up and selling them as bonds to hedge funds, big banks.
And Wall Street?
It was actually in LA. The firm is based in LA, but they have 5 or 6 locations. So they have an East Coast office, Miami office, Seattle. And so I was really lucky because my role out of school was like a sales job at first.
Yeah.
I thought I wanted to go, the finance route. I always wanted to work at a hedge fund. Everyone always told me I got to go work at, an investment bank and do my time essentially.
Yeah.
But I was really fortunate, and the CEO at Velocity gave me some really great advice and basically said, come work for us. You'll learn how to run a business. You can work many different roles. You'll meet all the bankers in the world, and you can determine if that's going to be a good job for you to take. Because, we're selling these bonds to a lot of people on Wall Street.
Exactly.
And so I got kind of great training there. I got to see a lot of the business. I actually ended up doing like some software development when I was there, and got a round trip experience there where I was doing sales. I was doing some product research, and then ultimately, working in some capital markets and becoming familiar with, big investment funds that we were trading these assets with. So that was a great experience. The company ended up going public. I got to go on the IPO roadshow and meet a bunch of really great folks. But then I got recruited to work at a hedge fund in New York City. And so I moved to New York City. I got to kind of split my time between LA and New York. And really what I got brought in for was to invest in crypto. So I had been investing most of my money, any capital I had, in crypto since college, trying to get private deal flow, signing up for things like AngelList, and just learning about as many companies as I could.
Shout out Nadal.
Yeah. Yeah. I was hustling, and I used to trade a lot of options. My dad was a day trader for a little bit, taught me how to trade options. And so I didn't make money in that, obviously, for first year or two while I was learning, but I was just trying to get leverage on my capital. I didn't really have a lot of capital in school, and crypto was kind of this opportunity to really get reflexivity on my capital and see, exponential upside. So I was super excited to kind of learn more about it. And it was a big hub at Berkeley, and ended up just like buying a bunch of layer ones and kind of like early publicly traded tokens that ended up doing extremely well, and kind of showed my performance to this hedge fund that had reached out to me through my network. And then I ended up kind of joining them. They're like a $4 billion macro hedge fund in New York, and ended up investing in things like I was one of the first investors in SWE, which is Miston Labs. So was running money for them and was really just focused on early stage venture investing in software in general. So the firm, we looked at a lot of vertical SaaS. I mostly looked at crypto and led a separate fund for them just focused on crypto. So I was very fortunate to meet Evan at Miston before he left Facebook, and wrote a check into that company, and then wrote a few more checks into some companies that did well. And then on top of that was managing like a liquid portfolio for them. So got a bunch of great experience there. We had some senior guys that were derivatives traders in the past that, built big options trading desks in Asia, and learned a lot of different things there. And then ultimately started hacking away on Solana,
Love
and
it.
worked with the team that won, the first Solana hackathon, built an options trading platform there, and kind of got nerd sniped into working on some stuff in Solana. And so was always just like a big fan of Solana, and then found my way back to the investing side with Theory. So that's kind of the full trajectory, and feel free to snip out as much as you want, but that's kind of the career path.
I love it. No, let's talk present day now that sort of the stage is set and the lay of the land is here. Let's just, before we get into Theory, and you can tie this in if you'd like, and by Theory I mean Theory Ventures, but present day 2024, middle of May, VC.
Yeah.
One of the sort of, I don't want to say wildest things, but we're sort of following the Web2 world with this is influencers are now all becoming venture capitalists, because VCs have realized it's like, okay, once you have a product, you go to market, it's like you need distribution. How do you get distribution nowadays? You pay influencers. Why not just, let them in at the beginning? And then they just promote so that's like one of the things that Ansem's getting in tons of them. A lot of the big, Web3 influencers. That's one part in particular that I've seen that's really interesting. And then the other phenomenon is the amount of capital that's in 2023 more specifically. I don't know, because the 2024 reports aren't out, but 2023 it dried up like crazy. I don't know the numbers. I did read the article. I believe it's either your co-founder or another partner at your company wrote on TechCrunch back in mid-April, how Web3 can have a 2024 comeback. It talks a lot about VC dollars, but like last year we got hammered. Like there was nothing. Just give me a little elevator pitch on, what exactly is happening in the sort of Web3 VC world right now.
Sure. Yeah. So, I think venture in general, last year, total dollar amount deployed into the space was the lowest it's been in, I want to say, 4 or 5 years.
Wow.
So last year was a really hard year for emerging managers to raise capital. So we were fortunate to launch the fund last year and be able to deploy in a market that I think is attractive, right? Being greedy when others are fearful is obviously popular saying, but I think we saw attractive valuations last year. And I think it was a great opportunity to deploy. So I get excited when, there's opportunity on the table and others might not be as aggressive. But I think you're right. I think what's broadly happening in the industry, which is really interesting to me, there are a few things that are happening in venture. One, venture is probably evolving very similar to its brother, private equity. Private equity, the size of total dollar under management, private equity has just exploded.
Yeah.
And so venture is kind of like following in lockstep behind. And so total dollar amount in venture has just gone up, astronomically. Don't have the exact numbers, but it's substantial, right? And so you have more dollars chasing fewer deals. And so it's really important if you're a venture investor that you have some sort of edge and understand what your edge is. What we're seeing in the market broadly, I think with these KOL rounds and like influencers is no different than what we've seen in traditional venture, which is in the early 2000s, we had a bunch of solo GPs that were launching funds off the backs of the internet boom, right? The dot-com boom. And so what kind of happened was you had this flurry of solo GPs that were launching funds and managing capital and investing in startups, but many of them went away. And the reason for that is, it's hard to build a brand with staying power and differentiates yourself and have a strategy that outperforms some of these bigger brand name firms. And so I think similarly, the market is evolving in crypto in a similar fashion to what kind of happened in traditional venture, which in traditional venture, you have the emergence of, celebrity funds, right?
Yeah,
Big celebrities
crazy.
managing capital and
Yep.
investing, and they get good deal flow, right? So it's just understanding your edge. And so a lot of crypto is obviously tied to marketing on Twitter. And so, having some of these influential people on your cap table can be very value add.
Yep.
Having raised capital before for a startup, we actually found that, or I felt that some of our angels were the biggest value adds on our cap table. There was obviously a lot of money that was raised in kind of 2020, 2021 that was going into crypto. And it's important and it's a big part of our strategy when taking money as a founder, that you have alignment with your investors and you feel like, they're going to be able to support you. And
Right.
I think
Yeah.
what Tomasz and I, so Tomasz is, founding member of Theory, the firm I work at now, we kind of had a conversation, which is traditional venture has built support systems for portfolio companies, and they do things to support their portfolio companies that don't really exist in Web3 today.
And that's what you guys are changing up.
Yeah, and a lot of it is a numbers game, right? So a lot of venture firms make 30 to 40 on average investments in a fund, and you multiply that by 3 or 4 funds depending on what fund that vintage they're on, and you're one of maybe 200.
You ain't getting that much love.
Right. And so I think what the market's kind of coming around to is, well, actually in crypto, at the end of the day, these networks are like supply and demand. What's really important is that people are aware of my project, and I need distribution, and the most influential people are actually on Twitter. So it makes sense. And I think, when taking money, it's important to actually do some thought around cap table design and understanding, like, I'm going to get support from my main lead investor here, and these angels can introduce me to these ecosystems or help with business development. And I think round structure is important to think through as a founder. And having raised capital in the past, I felt like I've experienced some similar problems, and I got to observe, which investors were helpful and which angels were helpful. And so, yeah, I think it's just a function of the market maturing.
Very cool. Spence, we got to take a quick break here. Give a huge shout out to our sponsor of the show, Prime XPT. And when we get back, we are going to jump right into Theory Ventures and, again, everything Web3 funding, Web3 startups, and VC related. Huge shout out to Prime XPT, longtime friends of CryptoNews.com and longtime sponsors of the Crypto News podcast. Prime XPT offers a robust trading system for both beginners and professional traders. It doesn't matter if you're a rookie or a vet. You can easily design and customize your layouts and widgets to best fit your trading style. Prime XPT is also offering an exclusive promo for listeners of the Crypto News podcast. Use the promo code CryptoNews50 to receive 50% of your deposit credited to your trading account. Again, that is CryptoNews50, CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. And now back to the show with Spence. I got tons of questions. I'm not a VC, but I think the industry is so intriguing. I think it's super cool. It's just betting at a massive scale, and obviously it's not just like degenerate betting where it's not Solana meme coins or Betway or Bodog or a betting site. It's much more thorough betting. But at the end of the day, you're still betting on companies. Interest the hell out of me. Before I get into it, give me the elevator pitch on Theory, and then I'm gonna throw some stuff at you.
Yeah, sure. I kind of set the landscape on how we viewed the market and why we felt like there was a need for a venture firm like ourselves.
Yeah.
But ultimately, what we ended up doing, which is, I think, really cool, is we looked at all the historical data for venture firms and their performance, and we looked at the winning strategies. And so the main thing that we kind of determined was, in order to move from the top quartile to top decile, you can kind of take 2 strategies. The first, you can index broadly into the space and run an accelerator, kind of like YC.
Yeah.
The next strategy is that you highly concentrate. And so if you're able to identify your winners, you double down and you invest a lot of capital into those companies. And I think the elevator pitch on Theory really is, we're a thesis-driven firm, and we like to have a lot of conviction in the companies that we're backing and do a lot of research. And that way we feel like we have an understanding of the market that we're investing in. Founders are going to understand markets better than investors because, they spend every living second thinking about that market. But it's our goal as an investor to do the research. And really what we're trying to do is do enough deep research that we feel comfortable enough to make a bet before other investors get there, right? So our edge is really depth and understanding. And so we'll research areas. We have multiple theses that we're running with, and then we'll spend months. I met 140 companies in one specific thesis area last year that I was
Wow.
looking into. I have a great understanding of the market, and then identify a winner. If we still believe that thesis is holding true after all the market research that we've done, make a bet or move on, right? So the thesis and kind of the elevator pitch is really, it's a highly concentrated approach toward investing in next generation software companies. We try to back highly technical founders with some sort of technical, discontinuity, which essentially just means edge, right? There's something in the market that they understand better than someone else. They've been developing products somewhere, and they're able to go to market uniquely due to some sort of technical function that they've kind of devised. And then we try to build go-to-market motions around them. So, you've got a great idea, you're very technically capable, but we'll help, kind of build a sales organization, help you hire for head of sales, or maybe it's, ecosystem partnerships or introducing you to people who might actually build or use your application in Web3. And so that's the approach we take. We really want to concentrate, and I think it aligns with founders, which is founders have, in theory, a portfolio of one, right? And so you're putting all of your eggs in one basket. We have a much smaller portfolio, maybe 12 to 15 companies. And in order to do well, we're dependent upon you to do well. And so, we really are doing everything we can to support these companies.
You give more love. That was well said. Yeah. I love the part about the discontinuity. I mean, honestly, I don't think I've ever even said that word. Learned a new word today. But that's so it's really just like finding a technical founder that has some type of technical edge and just levering the fuck up. That's pretty much it.
Yeah. The way I think about it is like in software, it's relevant for open source software. It's very difficult to build an edge in software, like a competitive moat. And so whatever edge you might have in getting to market early is very important, because I think the only moat probably in software is distribution.
Yeah.
So how do I get my product in as many people's hands as possible? You might have a unique insight into the market, and usually it's a technical edge, right? A product's built a certain way, and you're re-architecting it or something like that. And so it's important for us, I think, to back founders that have that insight, and then it's our job to hopefully help them build distribution.
How much, bit of a dual-faceted question here. Yeah. How much does brand matter in Web3? Like, is it as paramount as Web2? Is it more paramount? And I guess sort of a tie into that is like, does brand even really matter when you're early stage VC? Like when you're a mature company, of course brand matters. But in the early days, like, isn't it all just like, what's your edge? What's your distribution? How quickly can you get your shit to customers?
Sure. Yeah, it's a good question. I think brand's really important. But I've also been on the other side of the question, which is like working at a venture firm within a hedge fund that didn't have a ton of brand, and it was very important that I go and hustle and show that I can add value to a portfolio company or potential investment. I think the thing about brand that's very valuable is if I'm Web3 company or Web2 company and I have an investor, the signal is really nice, right? Which is, I'm a legitimate organization. You should work with me because these investors have done due diligence and determined that I'm potentially building something, credible here. And just like I said, there's a lot of capital, a lot of dollar amount in coming into crypto and coming into venture in general. And so brand is a way to differentiate. Brand is very difficult though, because it's not something that you can kind of just like muster together. It takes many years, and
100%.
Yeah, there's a cultural feel to it, and so it's something we're conscious of. But I also think that you can prove value in other ways to founders, and ultimately, like, the most important thing is that you provide some sort of product support and help these companies build, really, really great products. But brand is important.
Yeah, and in crypto, I feel like there's three pillars of branding. I feel like, does it make me money? Is it easy / fun to use? And other people talk about it. Because like, even if you have one and two, but no one else cares, like, I feel like you sort of need that attention. You need that sort of qualitative currency in crypto, or else you're hooped. Like, I don't know if I'm out to lunch there, but I feel like there's really only three things in crypto, to be honest.
Yeah. So I think there's like two ways to split that question. One is like brand from a venture perspective, which is like brand, you build goodwill. There's general smarts, public discourse that you might have, writings you might have. And then there's brand amongst founders, which is, I've worked with this venture firm. They're very credible. They work extremely hard for me. But then there's also brand in crypto in general and with projects, which is like, there's a difference when you like feel and use a really, really great product, or when like someone gets the messaging and branding, right? And there are companies that build incredible products, but they don't have that like go-to-market motion.
Bingo.
I mean, one kind of interesting thing, when we were building in Solana, like something I felt like many crypto teams didn't do enough was actually just market research and user studies. And understanding like, what does it look like when someone interacts with this product and uses this product? Because you'll be surprised. Like often you'll do these test studies and you'll send someone your product and say, hey, interact with product. We just, redesigned UI, take a look. People will turn the device like upside down and like click on buttons that like you would have never imagined, right? So it's like pretty comical because you might be watching someone, you're like, oh, we have this trading interface and like we have like a really easy like stake button right here. And like people will like navigate to everything but the stake button. So doing cohort testing and like having a strong feel for like the brand that you're developing, what the public discourse is around that brand, your marketing, everything is really valuable. And I think the best companies in crypto have kind of figured that out. You can build, the next best product in crypto, but if you haven't worked on your brand and your image and your marketing, like
you're hooped.
You're hooped. I've never used that word either. So
you're hooped. That's a hockey term. It's crazy. You mentioned this sort of consumer studies. Like I've done Hotjar with so many clients and companies in the past. I'm sure you know what Hotjar is, but it's just like seeing you're so used to sort of your own personal workflows on the computer with your mouse or with whatever navigation system you use, and then you watch other people and you're like, what the actual F are they doing? Like it is crazy when you think you have everything UX, UI wise down to a T, and it's the exact opposite. Crazy the impact of like colors and little things like that matter too. But one thing on that note, because you guys are in such a unique and cool position where you get to help really interesting, youthful companies explode, what other areas are you just like, man, how are you guys not doing this? Are there any in particular where either you guys are like, how aren't you doing this? Or where they really need the help? Just any areas in general where it's like, this should be done.
Yeah. So theory, we invest in Web2 and Web3. So I look at like a lot of AI companies, I look at a lot of data companies, and I look at a lot of crypto companies. Those are kind of the three areas that we invest. We look, primarily into data, AI, and crypto. And I think it's interesting because like we do a lot of research in these markets, and then what we end up doing is we talk to a lot of customers. And so on the B2B side, we're talking to, big enterprises all day and trying to understand their problems and needs.
So hold up, sorry, Spence. So you'll get on the phone with your portfolio company's client, like their customer, to learn more about it.
Yeah, so kind of like two stages there. One, before we make an investment, I will talk to developers building on top of an ecosystem. I will talk to, application developers,
everyone,
ecosystem partners, as many people as I can to kind of reference and understand that, that this is really a great opportunity. And so that will be like kind of in the due diligence process. But then on top of that, because we're running with all these different theses where we're exploring different areas, we'll talk to individuals in crypto and in Web2 to try to understand the market dynamics, where the holes might be. And so in an ideal world, we've done so much market research, we can hand off those opportunities and that feedback to founders that we're looking to invest in. And we can say, hey, according to our due diligence, here's the market, here's where the customer appetite is, where the developer interest is coming from. There's a hole in the market potentially here. And that way we have great alignment kind of when we get on the phone. And so, customer due diligence is a big part of what we do. And so in terms of like areas of interest, it depends. I think there's like a lot of opportunity in both Web2 and Web3, but like specific categories, I'm curious if you have any, focus areas.
Yeah, just things that you'd help with, like sales is one thing that I've been fortunate to help with some early stage companies as well, where just small little things like where the founder can be very technical and he's like, I don't have, not the wherewithal for lack of better words, but I want to get in someone better than me at building up the full sales cycle, all the way from, from product messaging and lead sourcing all the way up to, closing and follow-up kind of thing.
Yeah. It's a great question. So we have a guy full-time on staff who built the inside and outside sales at a company called Looker, which was acquired by Google for about $4 billion.
Sheesh.
So he's incredible, and he works with a lot of our portfolio companies very closely, serves as like a BDR some days, right?
Yeah.
So he's doing really, really great things. And then the sales cycle in crypto is different. Unless you're selling to like Web2 institutions, it's a lot of like back and forth in Telegram,
Yeah. It's
right? Like it's
so much
kind of
different.
opaque. It's kind of opaque and it's kind of difficult. And so having been there and having done business development in the past, it is somewhere where like I feel comfortable, working with our portfolio companies, doing contract negotiations, right? Like qualifying leads. Like these are
Yeah.
things that understanding if I should go hunt an elephant or go after a bunch of
Yeah.
smaller business deals.
Well
So
said.
yeah, there's a lot to do. And I think again, coming back to just like in terms of portfolio support, I think there's table stakes here that a lot of firms are not hitting on. And being able to roll up your sleeves and get your hand dirty with these founders is like very appealing.
Well said. That's said, man. Such a crazy point you brought up that again is not front of mind per se, but is always in your mind. And that just that the sales cycle of crypto, like 5-figure deals, 6-figure deals. I'm sure some 7 and 8, like just not even a fucking Zoom call, like on Telegram. Like maybe someone wants to jump on like a Signal call. It's just it's so different. Like
it's different.
Twitter DMs. Just I'm trying to think. I'm going back to my Web2 days. Like every call, doc sent this, blah blah blah. It's like, send me the TX address. Send me the hash.
Yeah. Yeah, it's different. And so I think like hiring for that role is challenging. And I think some people like come into crypto from Web2 and they're like, oh, I'm just going to build out like a traditional enterprise stack and hire, a head of sales and a BDR and like a bunch of AEs. And a lot of it's relationship based, right? And so it's a difficult job to hire for. And, contract negotiation for many of these founders is like something they're doing for the first time, right?
Yeah. Interesting.
Yeah.
Spencer, you're getting a little tight for time here, mate. Before we let you go, of course, you need to do a full unplug of Theory. Walk me through the portfolio companies that you guys have at the moment. I know you've recently done a couple pretty juicy raises. Give me sort of the quick pitch on any of the companies that you'd like to talk about and the cool shit that they're building and doing.
Yeah, so we have 2 crypto investments that we're extremely excited about, but they haven't announced their financing yet. And the financing rounds are going to get announced probably at the end of this month, in the coming months. One of them is on this T-shirt I'm wearing right now, but you can't see.
I can only see the top of it.
Yeah, it's on the sleeve, luckily. Yeah, we work with I could kind of tease it out. We work with so we do a lot of stuff with data. We work with one data company in crypto who's growing really, really quickly. And they work with some major finance companies. There was basically some really great business developments there. The company's growing really fast, but they come from Stanford and they work various roles within a few different AI companies, but they're best in class and they power many of the applications that, your listeners or users use. So I think like when it's announced, I'm happy to share, but not comfortable sharing like the crypto investments yet, but
we'll change the show notes once it goes live.
Perfect. Yeah, but there's a data company that we're really excited about. And then we backed Layer 1 recently that's really, really unique and we're super excited about. But I think like categorically, what's interesting to me to kind of think about is, one, you're seeing the entrance of like a lot of big financial institutions that need to touch crypto. And so they need data. And so how do we get fraud data, accounting data, transaction data to all these big institutions? Well, one of the companies we're working with is really, really good at that. The other company that we're working with is has some novel economics that we're really excited about. And so when, the show notes will get updated and I have more to share soon. But in the Web2 world, I've worked with a company called Superlinked. They're a vector compute company. And so what they essentially do is they take all of your company data and they turn it into a vector for you, which is very prominent within AI today. Many of these large language model applications are built on top of vector databases. We built search over 20 plus years, and PageRank is one of the technologies that we use that's highly performant for search and retrieval. What's interesting with large language models is many of them are architected on top of a vector database. Vector databases are using nearest neighbor lookup, which is just like a cosine function to store your data in the form of a vector. And then they search amongst those vectors and retrieve the most relevant vector depending on the query or whatever function the application is accomplishing. And what's super, super cool is you take all this data, putting it into a vector and then storing in a vector database. Many people are using like simplistic nearest neighbor lookup, like I said, but Superlink takes all of these additional like features and metadata and stores that into the vector. So you get like highly performant search and retrieval of vectors. So it's like a pure infrastructure investment. Why this is valuable is like, if you imagine the future of search and retrieval, this company could be, a next generation Databricks, where a lot of compute and search and retrieval is actually being done in the form of a vector. And so this is one of the first companies I worked on. We did the seed. They work with like big customers like MongoDB, and super excited about that. So I would say kind of cut my teeth half between AI and half in crypto. And that's one company I was super excited about.
For the listeners at home, this dude was literally smiling for the last 2 minutes while he was talking about that company. Spence, I don't know if you love like data and AI as much as you're like playing it off, or if like deep down this company's gonna make you an absolute bag. I feel like it's a bit of both, just based off the smile, but probably a bit of both, right?
Smart guys. They built this at YouTube. So when you're watching YouTube and you click on a video, the recommendation system is on top of a vector database. And that's what Superlink does. But they do it for, a bunch of different companies. And it's going to be kind of a very important part of your software stack in the future.
Sick. Hopefully that's a nice like 100 or 1,000 bagger for you. Spence, what an episode. Hope to meet you in person one day. This was an absolute treat, and pumped to have you on for round 2. Before we let you go, can you please let our listeners know where they can find you personally and Theory Ventures online and on socials?
Sure, yeah. I'm Spencer Farrar on Twitter. It's my first and last name. But you can find us on our website. Our website is just theory.ventures. Pretty responsive to DMs, so feel free to shoot me a note and I'll get back to you.
Love it. Spence, thanks for coming on, mate. Appreciate it, and wishing you and the team all the best.
Thanks, Matt.
Folks, what an episode with Spencer Farrar, partner at Theory Ventures. We got into everything Web3 venture capital related, the state of Web3 funding, startups, you name it. Love to see it. Huge shout out to Spence and the team for making this happen. If you guys enjoyed this one, and I hope you did, please do subscribe. It would mean the world to my team and I. Speaking of the team, love you guys as always. Eustace, you are the man. And back to the listeners, keep on growing those bags and keep on staying healthy, wealthy, and happy. Bye for now. Love you guys, and talk to you all soon. Ciao.